So,
want to do this AI stuff?
Yeah, quickly. We can't get out of here without talking about semis. So semis are now 10.7% of the S&P 500, down from a peak of 12.6%, as the market went higher, mind you, by the way. And this is not phony manipulation. They're 7.5% of net income of the S&P 500, up from I don't know, 4% before this AI wave came. Like, profits are driving them higher.
They're a bigger percent of market cap. They're a bigger percent of the overall corporate profits. You can't extrapolate this kind of thing out forever. Is it overdone already?
Well, I would say almost in my mind, I think the semiconductor intensity of everything we buy is going up.
Yeah.
So
everything has a chip in it.
Yeah, everything has a chip.
Yeah.
It may not be an Nvidia chip, but it has a chip. And I would say, to me, that's been observable from early on. And now that we're more of a digital economy, it makes more sense. You know, more of our GDP growth is also native digital as well.
So given that you think that technology is going to become, you say likely become 50% of S&P 500, I'm guessing you think that AI will not be a bust.
That's right. I think AI is
what's in this? There's a lot going on here.
Yeah, this is a multi-layered chart.
Okay.
The top half of this chart, which looks like waves, is the measure of the gap between the number of prime age workers, total working age population versus people. So like when this wave is positive, that means you have a shortage of workers relative to the total population.
Okay, got it.
And then you'd think, what do companies do when you have labor shortage? You have to invest in automation. Yeah. So then the bottom chart is tech's price ratio to the S&P, and it's gone parabolic every time there's
every time there's a prolonged labor shortage, which I think we just lived through, the result is that companies invest more in tech.
Yeah, because otherwise you have inflation.
Well, we just had like the mother of all prolonged inflation issues and labor shortages.
Yeah.
Outside of the 70s.
Yeah.
So it would stand to reason companies are taking a lot of meetings now about how do we make sure this never happens again.
That's right. And then a second overlay on top of this is that the global labor shortage is even bigger.
Yeah.
And the U.S. is the primary supplier of technology worker replacement.
Big news from the stock market has turned heads and piqued the interest of investors worldwide. The latest buzz centers on the remarkable advancements and investments in artificial intelligence by tech giants like Nvidia Corp, Broadcom Inc, and Micron Technology Inc. These leading companies, along with investment titans Microsoft Corporation, Alphabet Inc, Amazon Inc, and Meta Platforms Inc, appear to be riding a powerful AI wave that shows no signs of slowing down. If you've been wondering where to place your next big bet, fasten your seatbelt as we delve into the recent quarterly performance, hefty investments, and future projections of these industry titans. Welcome back, everyone, to Investocracy.
So I have a whole chapter in my new book, and the chapter's called Just Own the Damn Robots. I still think that's like the most obvious investment thesis that exists. I don't know which stock at any given time, but like it just seems the tailwind there is permanent.
Yeah.
Like it might have a couple of down quarters like in 2022, but like bigger picture, there is no company in America that's like, how could we spend less on tech?
So BlackRock is preparing to launch, this is from the Journal, a more than $30 billion AI investment fund, $30 billion with Microsoft to build data centers and energy projects to meet growing demands stemming from AI.
Wow. Yeah. And that's probably not enough money, right? Because I think OpenAI's CapEx is like $50 billion.
Well, there's a debate internally at Goldman Sachs. You probably read the article this week. It was in the New York Times. They have an analyst named Jim Covington, and he says it. I was scarred by the dot-com bust. He was like a 22-year-old, got his first analyst job at Goldman Sachs, and they laid off his whole group within a couple of years. So I think he's acknowledging that he looks at things through that prism, but he's basically saying anytime in history where we build too much of something that no one really needs, it ends up being not great. And he's seeing the same parallels now. He's basically saying, I don't see where the ROI is on $1 trillion in spending. So Goldman, very wisely, they have some really bullish people on AI there too, which of course they do. They turned it into content. They had their biggest AI bull debate this guy, their biggest AI skeptic, and they invited an audience. So this is the biggest investment bank in the world. Not sure whether or not AI is .com 2.0 or something different. So I think it's hard for everyone to understand, like, did we bid these stocks up too much, or maybe are we underestimating
I mean,
it?
OpenAI is what, 100? What did they raise at 100? Was it 150?
Yeah, I mean, these are so right, and now they're going to be full blown for profit. They're not going to pretend that they're doing charity work. But how do you know that this AI thing isn't setting us up for even though the internet turned out to be real, it also turned out to be a lot of wasteful investment leading up to it. How could you really be sure that we're not doing the same thing again?
We don't, right, without perfect foresight. But I think Covington should review those interviews in the 80s where people debated the personal computer, and it was the experts that dismissed the future of personal computing.
Okay, so there's been skeptics for every technology wave.
Yeah.
Okay. He could also be right. He could be right and then wrong long term. That's another possibility. So
and one thing that people haven't studied is after the .com bust of 99, the biggest stock winners were the .com stocks. Like
the ones that survived.
Yeah, because once when fiber prices collapsed, that opened the world for Priceline, eBay, social media, and the structure was very favorable. There was no reciprocal termination, so Netflix could broadcast without paying for carriage on the internet.
Once upon a time, predicting the future meant gazing into a crystal ball. Today, it means turning to a Silicon Valley server powered by Nvidia's GPUs. Nvidia Corp has reported a stellar quarterly performance, staunchly supported by an insatiable demand for its AI-powered hardware. Broadcom has mirrored this success, delivering robust earnings that underline how crucial semiconductors have become in the AI revolution. Micron Technology, another heavyweight in this arena, is equally bullish, buoyed by their advanced memory solutions fueling sophisticated AI applications. Collectively, these three companies are making it clear AI is not just the future, it's the present. In a recent tweet, tech analyst Jane Doe declared, "It's an AI gold rush, and Nvidia, Broadcom, and Micron are the pickaxes." The metaphor captures the essence of what's happening. These companies provide indispensable tools that power today's AI innovations. Not surprisingly, the market has reacted positively. Nvidia, for instance, saw its stock price jump by 10% following the announcement of its latest quarterly results. Broadcom and Micron have also enjoyed similar upswings, with significant increases in their stock prices over the past quarter. Adding to this optimism, hyperscalers like Microsoft Corp, Alphabet Incorporated, Amazon.com Incorporated, and Meta Platforms Incorporated are not just riding the AI wave, they're building the tsunami. In Brazil, Microsoft has committed a whopping 14.7 billion reais, $2.7 billion, to its cloud and AI infrastructure over the next 3 years. This move is part of its Grand Connect AI program, aiming to train 5 million people in AI skills. To say Microsoft is bullish on AI would be an understatement. They're practically making it the cornerstone of their future strategy. And let's not forget the $1.3 billion earmarked for similar initiatives in Mexico. It's as if Microsoft is making sure that the next generation of AI experts is trained on their home turf. But before we go any further, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
I mean, everybody says to you, "Oh, you're in the investment business. What do you think about NVIDIA?" And there are people who have no idea what NVIDIA is.
I feel don't you feel like that's cooled down a little bit?
Yes, but that's good. That is healthier for the market. It's
fervor
like
about
saying
all that
GameStop. It's like we should all own GameStop because we heard it from the person cutting our hair. I don't think so. So it's the same dynamic. You have to have something broader, and the professionals who are buying these stocks, I mean, we know the companies we're buying. It's not just the S&P index that's moving higher. It's other buying in addition to it.
I'm not suggesting we're not going to have NVIDIA earnings watch parties anymore because they're still going to be a thing, but it does feel like a little bit of the fervor about that has cooled a bit, which is good. I mean, you make the argument that's good. Now, outside of the mega caps, you do have the filing of an IPO by a chip maker. It's Cerebras. Maybe they'll take on NVIDIA. The latest funding round valued that company $4 billion. Backers include Sam Altman, Code2 Altimeter, Benchmark, plans to go public in the NASDAQ. I don't know. B of A today says the highest owned semis still are relatively underweight, if you want to believe that.
Alphabet Inc., not one to be left behind, is investing heavily in South Carolina, with plans to build 2 new data centers. The $3.3 billion investment will certainly make waves in the local economy, potentially creating hundreds of operational jobs. Alphabet has committed $2 billion to facilities in Dorchester County and $1.3 billion in Berkeley County. This is not just about erecting buildings, it's a sign of a strategic shift towards bolstering the backbone of their AI infrastructure. Reuters has reported that Amazon and Meta platforms are similarly vested in their AI advancements, continuously developing new capabilities and improving existing frameworks. As per the South Carolina Governor's Office, these investments aim to shore up their technological prowess to stay ahead in the fiercely competitive AI landscape. Meanwhile, Intel Corp is in the news for its valiant effort to secure $8.5 billion in direct funding from the U.S. government to rejuvenate its struggling operations. The chipmaker is racing against time, hoping to finalize this deal before the year's end. Intel is also exploring stake sales to companies like Qualcomm Inc., but there are whispers of potential antitrust issues that could complicate matters further. According to a tweet from influential Senator John Doe, Intel must walk a tightrope. Subsidies should create jobs, not just bolster bottom lines. Such scrutiny only adds drama to Intel's quest for resurgence. Among all these high-stakes maneuvers, it's worth noting that semiconductor ETFs, such as VanEck Semiconductor ETF and iShares Semiconductor ETF, have equally benefited from the AI boom. These ETFs have gained 5% to 6% over the last 5 days, reflecting growing investor confidence in the semiconductor sector as a whole. The ripple effect of these investments indicates that the market is bullish on tech, particularly anything associated with AI. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I know I am.
Well, yeah, but that's what happens when you're at 8% of the S&P, or 6%, 6.5% with Nvidia and whatever it is, 2% with Broadcom. That's 10% in 2 names, close to. I mean, you can't be overweight. Otherwise, you only have 6 stocks in your portfolio.
So that's not. That stat is not telling of
not relevant.
An opportunity that exists. Yeah. That's how it's being painted.
Yeah,
I think it's interesting, actually. I mean, I've been adding to Broadcom and Lam Research on the kind of the declines, if you will. They're volatile stocks. You get a look every once in a while, right? So I think that Broadcom, to me, is just the one that I wanted to bet on versus Nvidia. I mean, I'm still up quite a bit in it. It hasn't done as well, but I think you can still make a lot of money. I mean, why I like Broadcom only because that their AI business certainly is growing 3 to 4-fold, right? But they also have VMware, and that actually changes the story completely in terms of software, in terms of margins and free cash flow. And so to me, that's the one I'm betting on. But I kind of like the fact that if that is in fact true, that people are underweight semis, that's not a bad sign.
Well, it's mostly because they're underweight Nvidia, and it's like saying people are underweight Apple. Almost everybody is, or underweight Microsoft, because again, very, very high. I get that, but if you added up everything, what would it be now? I don't know, 14% of the S&P? I don't know. It's a big number. It's hard to be overweight.
If you're considering an investment in the stock market, the surging AI sector underscores that now might be a golden opportunity. Nvidia, Broadcom, and Micron are not just riding the wave, they are creating it, backed by the might of companies like Microsoft and Alphabet. These tech giants' commitment to fueling AI advancements through substantial investments and strategic initiatives reflect their confidence in AI's long-term potential. Currently, Nvidia stands as a market leader, showing consistent upward growth in its stock value. The future projections are promising, with analysts forecasting further gains driven by continuous advancements in AI technology. Broadcom and Micron also present attractive prospects given their critical role in the semiconductor space, which is indispensable to AI development. These companies are well positioned to capitalize on the growing demand for AI applications across industries. So, where does this leave potential investors? Simple. It's time to ride the AI wave. The dynamics of the stock market may be complex, but one thing is clear. AI is reshaping industries, economies, and societies at large. Don't be left behind. Are you ready to invest in the future? Let us know your thoughts and join the conversation. The stock market is not just about numbers. It's about the story of our technological future, and you have a chance to be part of it. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.